In the world of global economics, the term game changer is thrown around a lot. But what happened in on February 6, 2026 actually deserves the title. After 10 months of grueling tariff deadlock that saw duties on Indian goods climb as high as 50%, the United States and India have officially hit the reset button. They're calling it a $30 trillion handshake. And here is the bottom line. The US has slashed reciprocal tariff on Indian goods down to 18%. In return, India has signaled an intent to purchase a staggering 500 billion worth of American energy, tech, aircrafts, and other things over the next 5 years. But why now? And what does this mean for the average business owner in Ludhiana or the tech firm in Bangalore? Today, we are breaking down the fine prints of the US India Interim Trade Agreement, the deal that just unlocked the world's most lucrative market for India. To understand how big this is, we have to look at how bad things almost got. In early 2025, trade relations were hit by a double whammy. First, the US introduced a reciprocal tariff. It's like a framework to address the trade deficit. Second, India faced a 25% punitive tariff specifically linked to its purchase of Russian oil. For the Indian exporter, the math was becoming impossible. Selling a shirt or a piece of machinery in the US meant facing duties that made Indian products too expensive for American shelves. But as of February 2026, that has changed. President Trump signaled an executive order removing the Russian oil penalty and lowering the general reciprocal tariff to 18%. Why 18%? It's a strategic number. It places India in a Goldilocks zone. Look at the competition. China is facing 35% tariff. Vietnam and Bangladesh are at 20%. By sitting at 18%, India suddenly has a price advantage over almost every other manufacturer hub in Asia. So, who are the big winners? Let's look at the sectors that are about to see a massive Made in India surge. Textile and apparel. This is a big one. Tariffs have dropped from 50% to 18% for silk product, and it's even better. They now enjoy zero duty access. We are talking about 113 billion market in the US that is now wide open for Indian cloth exporters. Next is machinery and engineering. India currently exports about 2.3 billion in machinery to the US. With tariff cut to 18%, exports believe that exporters believe that it could triple now. This isn't just about spare parts. It's about heavy industrial equipment. Next is gems and jewelry, and that is equal to $61 billion market. While the standard rates is 18%, high value items like diamonds and platinum have secured 0% duty access. Next is pharmaceutical. Crucially, generic drugs and the ingredients now have zero additional duties. This cements India's position as the pharmacy of the world for the American health system. But it's not a total free for all. India was very careful about the red lines. For the farmers watching, the deal fully protects sensitive sectors like dairy, rice, and pulses. You won't see American milk or wheat flooding the Indian market overnight. This was a farmer first negotiations for the Indian side. Now, let's talk about the US, what US gets. This isn't charity, it's commerce. India has expressed an intent to buy $500 billion worth of US goods over next 5 years. Notice the word intent. In the initial draft of the deal, the US used the word committed. India pushed back and the language was softened. This means the purchases will be driven by private companies based on market demand, not on forced government mandate. So, what are India buying? What are we buying? First is energy. Moving away from Russian oil means buying more American LNG and crude. Next is aviation. Think huge orders for Boeing. Minister Piyush Goyal mentioned that the aviation sector alone could account for over $100 billion. High tech. We are talking about GPUs for data centers, semiconductor technology. This aligns perfectly with India's AI and Digital India mission. Is this final deal? Not quite. This is an interim agreement, essentially a phase one. It's a bridge to a full bilateral trade agreement, which is called BTA. There are still hurdles. The two countries are still negotiating rules of origin, which basically ensures that China can't just ship goods through India to sneak into US at 18% rate. They are also still ironing out the rules on digital trade and service taxes. But the cloud of uncertainty that hung over 2025 has now cleared. For investors, this is the stability they were waiting for. The Indian stock market is already reflecting its optimism, especially in the export heavy sectors like auto, ancillaries, and textiles. The $30 trillion handshake is more than just a reduction in numbers. It's a strategic realignment by lowering the barrier to the world's largest consumer market. The US is betting on India as its primary alternative to China, and by committing to massive energy and tech purchases, India is securing the fuel it needs to become a 30 trillion economy by 2047. It's a win-win, but the real work starts now for Indian manufacturers. The market is open, now they just have to compete. So friends, what do you think? Is 18% low enough to make India the world's next manufacturing superpower? Let me know in the comment section below. And don't forget to like and subscribe for more deep dives into the global economy. And I shall see you in the next one, friends.